The greatest mistake you can make in life is to be continually fearing that you will make one. Elbert Hubbard. My friends, how do you get over those fears? A lot of people have fears of pulling the trigger, jumping into trades. That all comes from practicing. That is, first doing practice trade after practice trade after practice trade. And then once you start getting good, what do you start doing? That's when you start doing the fractional trading. Small dollar amounts, but it lets you practice getting in and then getting out, either successfully with your good till canceled sell order, selling itself out, or if the trade doesn't work, turning around and pulling that trade, canceling the good till canceled sell order, and then cutting your losses. You do that over and over and over again. You get good at it. You get used to it. It becomes rote. It becomes something that is an intellectual decision that you make before you jump in. You look at all of our charts, and when we are jumping in, we know what our stop loss is. We know what we want to make our targeted profit, and we jump in intelligently based upon what the charts are showing us. And you will see as you backtrack using our method that it works time and time and time again. And if you can limit your losses, you will see this work for you. We're not a stock calling service. We're an education firm. You need to prove this to yourself. You need to practice it. And you do that every day, 10 to 15 minutes. That's all we ask. Let's look at what's going on these charts. Look at the S&P 500. Lower low today. It was up a little bit by the end of the day, but we can still see we're at a negative 15. Things are still hammering down. Negative 15 on our success multiplier formula means the one, I don't know how we actually call it. We give 1 point to, of course, the half day, 4 points to the 2 day because it's 4 half days, and 10 points to the weekly because it's 10 half days. Does that make sense? That's how we see the power of the wave. You don't get worse than negative 15 for down moves. It is a down market. The S&P has lost, what, 16% or so for the year so far? And of course, 20 plus percent, 22, 23% or so for the NASDAQ 100. People want to know what a bull market looks like. Well, this is a bear market. It sure as heck looks like to me where we are. But again, look at it yourself. See what you think's going on now. Again, up a little bit for the day, but still everything hammering down, 2 day hammering down, weekly hammering down. It's a tough market. We haven't crossed over on the weekly yet. When it comes to the 200 EMA, the 2 day, of course, has already done that. In fact, it's in the process. It's already been penetrating it for those last few days. And of course, now what do we see? Pushing through it. Now let's go from the S&P 500 to the NASDAQ 100, up 1.67%, but again, hitting a lower low, down in the morning, pulling up a little in the afternoon, still at a negative 15, still red. We look at the 2 day, still red. We look at the weekly, still red. Lots of down movement. How far away are we from the 200 EMA? Little ways to go there, but we look at the 200 EMA. That was the weekly. We look at the 2 day. We passed that several days ago. This is the NASDAQ 100. So again, lots of downward pressure on the market. What could turn this market around? I don't know. If there was some peace deal in Ukraine, maybe something like that. Not sure just what's going to do it, if anything. This may be for the long haul. We'll wait, watch, and see. Now, here's a spot for a potential down trade in something like either practice puts on TLT, 20-year bonds, or TBF, Tango Bravo Foxtrot. What is that? Well, that's the single short fund for 20-year bonds. It is pegged to go up percent by percent as TLT goes down. Now, it does have fees. It does revalue itself every day. So again, there are difficulties with it if the market goes against you by magnifying some losses. But if you don't practice trade it, you're never going to know what it's about. So We jumped into a short position this morning. Again, we set our stop loss at 2.26. Why? Because it was where our average true range was. Those of you who've taken that average true range training, you know how we do this. 2-to-1 risk to reward ratio. We reduce the size of our X trade, that's our standard trade, by the percentage of the risk in order to keep it standardized so that volatility is not working against us and not causing us to be hammered if the trade doesn't go in our direction. Just a little safekeeping item for you to consider. So we'll continue to watch this trade, but it did pop up this morning. Why? Because we were at a 14 until we had that rotation over in the morning that gave us a jumping in point for a down trade. That is why, because the half-day chart was heading up and then crossed over in the morning. The 2-day was already pegged down and the weekly was already pegged down. That's why we had a number 14 representing 4 points from the 2-day and 10 points from the weekly. And then we added that other point to it. Now we're at a 15, gave us a good jumping in point for a potential down trade. We're going to leave now bonds. We're going to go to gold. Gold, look at this, pushing through, just hammering through in the morning further. Well, pulled up just a little bit in the afternoon, but down 1.85%. Gold just a hammering down, my friends. Negative there on the half day, negative on the 2-day, and of course negative on the weekly going into the second week. Those of you who jumped into gold, rotating over, going down, shorting it. Of course, the problem with gold is unlike 20-year bonds where you have an okay inverse fund, DGZ is the best I've been able to find. And the problem with that inverse fund is the bid and the ask is so far apart. How do you short gold? Well, your old puts, your old options is the way you can practice trade that. And of course, for our Patreon members, we have great options training available to you. At any of the 3 levels of support at Patreon, you get Options Made Simple the Charting Wealth Way. Sends you in the right direction. That is whether it's up or down. That is where we are on gold. Lastly, we'll go to Bitcoin. What's up on Bitcoin? Well, the weekly, we can see that it is a hammering down. Again, up a little bit for the day, 0.67%, but still red down candles are going. What do we see on the 2-day? We just see stair steps going on down. And when we go to the half day, what do we see there? Well, we had it switch over on us about mid-course in our latest short trade. We closed that out when we went into the green. That was on the 28th in the afternoon. We had it slide sideways and then it popped up. We closed it out at no loss. And then, of course, the down movement continued. But that's not what we do. When we're going to jump into a down move, we're going to jump in right typically. Now, we told you about this experiment. It did not go above the center bands, both the top and the bottom bands here. We jumped in as a practice to see how it works. It didn't work, did it? So again, these are the kind of things you note in your daily log, your trader's journal, where you pay attention to the little thought experiments you run and what works and what doesn't work. This one didn't work. How do we typically want to get into a short position? We want to get into a short position like we did previously, where again things were above this center gray band and then dropped over going down. That one worked for us quite nicely in just what, a 1, 2, 3 day period, down 7.85% in that trade. This last one didn't cost us anything, but again, did not work for us. And we didn't turn around and jump back in because again, it wasn't high enough in that drop on the crossover with the STC. So those kind of things that you learn by doing. And we encourage you to practice trade, fractional trade. You can do all this stuff for free, or if you get into the fractional trading for $100, buy a couple of 3 shares of something like the Van Eck Bitcoin Strategy Fund. And if you lose 20% even, you're down what? 20 bucks. You're not down 2,000 bucks. You're not doing something crazy with double loaded options or something, way out of the money stuff you're hoping is going to work for you, and you lose everything. That's not the way to make it in the marketplace. Cutting your losses, number one key to success. And again, riding those profits. So you have to practice to get here. How do you get to Carnegie Hall? Practice. How do you get good at stock trading and stock investing? Practice. Day in and day out, 15 minutes, that's all we ask. By the way, my friends, I am traveling to the UK tomorrow. I'm going to try to get the show out for you. Don't know what it's going to be like on Wednesday, Thursday, and Friday. I'll do my best. God bless. All the best from the whole team at Charting Wealth, World Headquarters.